Let us look at this question. A company borrows some funds to purchase the shares. Then which of the following statements is correct? If the after-tax cost of borrowed fund is less than the earning yield of the share before the repurchase, then the after repurchase EPS, that is earning per share of the company, will fall. If the after-tax cost of borrowed funds is more than the earning yield of the share before the repurchase, then after the repurchase, the earning per share of the company will fall. The share repurchase does not affect the earning per share. So let us take an example. Suppose a company has shares with the share price of $100 and it has 1000 common shares outstanding, and its total earning is $5,000. So in this case the EPS will be 5,000 divided by 1000 shares outstanding, that is $5 per share, and the earning yield will be equal to EPS as a percentage of the share price. So it will be equal to 5%, because 5 per share and each share is costing 100 rupees. So my earning yield will be 5%. Now suppose the company wants to repurchase 500 shares. It wants to repurchase 500 shares at the market price, means at $100, and it is borrowing funds at the rate of 8%. Then the amount of interest that it will pay in 1 year will be $500. 500 shares into $100 into 8%, that is 8 divided by 100, which will be equal to $4,000. So it will have to pay an interest of $4,000 per year. So in this case the new EPS will be the earlier income, that is 5,000 minus $4,000, because this part is being paid as an interest, divided by the number of shares outstanding. So since 500 shares has already been repurchased, so my leftover shares is 500. So in this case my earning per share is $2. So we can see that when the rate at which the company can raise or borrow funds is greater than the earning yield of the share before the repurchase, then my earning per share after the repurchase will fall. So in this case option B is the correct option, that which says that if an after tax cost of borrowed funds is more than the earning yield of the share before the repurchase, then after the repurchase the earning price per share of the company will fall. The opposite will happen if the after tax cost of borrowed funds is less than the earning yield of the share before the repurchase. In that case the earning per share after the repurchase of the company will increase.